Hello, we are going to be starting chapter 4, which is a continuation of the accounting cycle. As we have went through the last few chapters, we have worked through having business transactions, putting them into a journal, taking that information from the journal and posting it into a ledger, and where we have each information for each account and how much each account has. Our next step in our accounting cycle is to actually do the end of the month statements or end of the fiscal period statements, whether it's a month, 6 months, a year, whichever way. What we're going to be working with most of this chapter is just a month. So the thing we're going to do first today is we're going to create a trial balance, which we have done a little bit of. You've created a balance sheet, which can be a trial balance. Our trial balance is basically there to prove that our accounts are correct and our debits equals our credits. We're going to go down into a worksheet. We'll talk about how the worksheet takes information and updates it and prepares it for our income statement and our balance sheet, which we will then create. So let's first look today at why do we use a worksheet. So we use a worksheet to organize our information. We use it to check the data. We want to make sure our debits and credits equal each other. If they don't, then we need to find that mistake before we go on. So the most important thing you can do when you do your worksheet is make sure that your debits and credits equal each other. Before you move on and do anything else in the worksheet, you need to add them up and make sure. If they do not equal each other, there's simple problems of the first thing is looking at making sure you copied them over right from the ledger, then going into your ledger and making sure you added right and made some of those, didn't make any of those mistakes, and then it just goes on from there to there. We can backtrack. But our worksheet is, I like the thought of it as a scrap piece of paper. It's just getting our information ready, making sure we have what we need to have ready to go. In the worksheet, the first two columns of the worksheet is the trial balance. It has a debit and credit. The accounts are all listed, and you put in whether it's a debit or credit balance. If it doesn't have a balance, you will leave it blank. So eventually we'll have income summary in there. You will leave it blank. It will not have anything in it because it doesn't have a balance currently. Then you have two columns that are called adjustments, a debit and credit for adjustments. And not all of those lines will be used, just a few of the counts. You have your adjusted trial balance. So what's your new trial balance? And then you'll have your income statement column and a balance sheet column. Your adjusting entries are used just for yourself, and this is really just to bring some of our accounts up to date. Things that we use this for are like supplies, prepaid insurance, prepaid rent, some salaries that maybe are on a month that weren't on the pay period, overlaps to the next one. So most of it is revenues and expenses, making sure that they match our income and that our revenue, our expenses match up to the time period that we actually use them. These are the ones that you're going to probably use this time. There's other ones also, but these are the ones we're going to be talking about now. Computer supplies, which should just be any type of supplies expense that you have. Prepaid items like rent, advertising. You could have equipment, so there could be depreciation or accumulated depreciation. And a lot of times you have expenses like salaries expense, rent expense, supplies expense, several things like that that fall into that. So how do we analyze this? Well, let's say that your computer supplies account throughout the year, or let's say throughout the fiscal period, the month, you bought $600 worth of merchandise. So down here, you'd have $600 that you had. But you count the inventory now, and in the inventory that you have left, you only have $100 worth. So really, you want your balance to be $100. So to get that, what we do is expense it out or adjust it. So we're going to say we want to subtract 500 from supplies, which would be a debit to supply or credit to supplies, and we're going to debit our expense for $500. So this month we used $500 worth of supplies. That way we say we still have 100 left on hand, which is over here in inventory. 600 minus 500 equals 100, and we have an accurate number. Prepaid rent can be the exact same way. So let's say we paid our rent 3 months ahead. Prepaid insurance is done the same way. It's going to say you paid $1,200 for insurance. 1 month's insurance is $400, or your rent, sorry, I was thinking insurance in my head. Rent used, it'd just be 1 month, $400. That $400 becomes an expense. So you're going to debit rent expense because that's the rent for that month. And then you're going to end up crediting it over here. And now you have an $800 balance of prepaid rent. Same thing with computer equipment. Expected to, it's going to work a lot with the depreciation. Normally they give you the depreciation for the whole year and then you just have to divide it by month. So our depreciation expense would be 80, our accumulated depreciation would be 80, and they just divided it so it's $80 per month. Most of the time that is given to you. When this would look in our balance sheet, we're going to take our computer equipment minus depreciation, and that's what it's worth now. We get more into depreciation a little bit later on, but we just understand that's just kind of the expense to the month that goes. Salaries accrued is another one. Let's say John works in May. This expense for May, or the salary for May, is actually going to go on the paycheck that comes in June. But we want to expense it out as part of May's. So we've already paid him $1,300, so we're going to add another $350 and say we're going to pay him as a liability. We still owe him $350. It's important for things like this because we want to make sure that our correct expenses are going with the income that we made that month, and so we can do some good analysis later on. As you go through this in your worksheet, you will notice when you do your adjustments, the first adjustment that we talked about was the computer supplies, and that is A, so it'd be a credit to computer supplies. And down here is going to be a debit to computer supplies expense. Make sure that is an A also. That way you can match them up and you know where your numbers go. Your B's was your rent. That's there. Your C's and D's. And sometimes you even have it to where you have up to E's and F's and G's and H and I's and everything. It can get pretty crazy with your adjustments. But you always want to label them so you can match them up and know which ones go with which. Your adjusted trial balance is just where you're adding your debits and credits together. You want to make sure that they equal each other again to make sure that you did your adjustments correctly and that you subtracted correctly. So you just basically move things over. There's no adjustment made, so you move it over. If there's an adjustment made, be 600 minus 500, or down here you would add and actually put them in there. If I see any mistakes with adjusted trial balance, is usually we forget to put these expenses in here. They had no balance over here, and so we'll forget to put them in over here. The income statement, everything that's basically below withdrawals, so any revenue and expenses is going to go on that. You're going to just move it over as a debit or credit, whatever way that it is written in your trial balance. And then you're going to add up your debits and your credits. They will not equal each other. You want to find the difference between them, and the difference between them is your either net income or net loss. This example, we have an $8,000 credit, which our credit is our revenues and expenses. We have a $3,100 debit, which is our expenses, because they have all expenses here. So we take revenue minus expenses, it's going to be a net income. So we need to put 40. This is very important to notice. This is the difference between them, 4,900. Add them up, you have both 8,000, you equal them. The key thing for this is to remember that if it's a debit, it's net income. If it's a credit, it's net loss. And your balance sheet will follow with that. You'll have your adjusted trial balance. Everything moves over. And then you will notice that it's everything from withdrawals above that is on that. And sometimes your accumulated depreciation and your salaries payable. A lot of times that is all mixed up within your accounts titles. So sometimes it's not all the way down here odd like this. But right now they are showing you that. Again, these two will not equal debits and credits. So you want your debits, which is your assets, to be higher than your liabilities. And it should equal the same as your income statement. If this number right here is not the same, then that's when you know you have a problem and you did something incorrectly. From there, then you're going to prepare your financial statements. The three that we're going to deal with is the income statement, which is just basically taking this information off this income statement and this section of the income statement and moving it over to this so that you can put them in and you're just transferring them over account titles and account balances. The statement of owner's equity is the same way. You're going to take the capital at the beginning. What was your net income minus any withdrawals? You have your new balance. And then you're going to look at your balance sheet. It's going to come from your balance sheet information. And that just transfers into your assets. And then your liabilities and owner's equity like we have done before. But this is you're getting the information from the balance sheet. So that about wraps up this chapter. It's not a huge, really long chapter, but it's kind of tedious. You have to make sure that you get your adjustments correctly. If you have any questions about your adjustments, please let me know. Give me a call. We can Skype about things. I can look at the problems you're working on if you're having some struggles, and I can tell you what you might need to be looking for. But remember, this week you will also have a vocab activity that is opened up in MyMTI, and that you need to do your vocab activity. When you're doing your vocab activity, make sure that you are typing in the letters, each letter, no matter what. Sometimes if the letter is already there, we don't type it in, but you still need to type it in. If it's a crossword puzzle, that will make sure that it recognizes that you typed the letter in twice and that's what's supposed to be there. Or know that some of you have had a little problems with that, with it grading weird, and that's what we're coming up with as a solution for that. Again, if you have any questions, please let me know. I'm here to help you, and have a good week.